welcome back once again to our tax guide session for individuals, sole proprietorship series. Last time we had a full session talking about the caveat of forming a sole proprietorship, about its unlimited liability. So now in context, we finally decided to push through with that structure. Now let's talk about owner's pay, self-employment tax, and the setup. Owner's drawings refer to the funds withdrawn from a business by its owners for personal use. These withdrawals reduce the owner's equity in the business. For example, you have a coffee shop and you had a profit of $120,000. You can drop the whole profit amount of $120,000 and still pay taxes on the profit of the whole $120,000, even if you took the whole amount. It'd still be subjected to ordinary income tax and self-employment tax. Here, the profit is 120, the withdrawal is 120, subjected to 120,000 ordinary income tax, self-employment tax. Next example is that you have 120,000 profit and you've withdrawn 50,000 for yourself and left the 70,000 in business bank account to be used for future expansion. In this situation, you'll still be subjected on the whole 120,000 profit, subjected to ordinary income tax and self-employment tax, even though you only got 50,000 for yourself. Next example, the whole 120,000 profit left to the business bank account used for your future expansion, and you withdraw nothing from the profit of $120,000. Still, you'll be subjected to the whole 120,000 profit, subjected to income tax and self-employment tax, even though the drawings are zero. Because the IRS taxes the profit, not the draw. Whatever your profit at the end of the year, that's what they will be taxed on, subjected to ordinary income tax and the self-employment tax. Now let's talk about self-employment tax. Self-employment tax is tax paid by individuals who work for themselves, such as sole proprietors, independent contractors, and freelancers. It primarily covers Social Security and Medicare taxes, which are typically withheld from employees' paychecks by employers. For comparison, here's the actual figures. If you're employed, you get to cover the whole 12.4 Social Security tax and the 2.9 Medicare tax. Meanwhile, for employees, it's divided between the employer and the employee's share, thereby reducing it to only 50% with 6.2 Social Security tax and the 1.45 Medicare tax through the employee's paycheck. Now, self-employed gets to pay the income tax and the self-employment tax, while the employee gets to pay their income tax and the employee tax, not directly to the IRS, but through a deduction in their W-2s or pay stubs. Lastly, setup for actually starting a sole proprietorship. First, you choose a business name, a legal name identified by the owner's personal name, or you can choose a DBA name. Register it as if you're operating under a different name or fictitious name. Check its availability. Ensure the name is not currently in use and you file a DBA. Register with the county clerk's office or state agency. Register with local authorities. Obtain a business or license permit. Check local requirements for general business license. For home-based businesses, check for specific permits. Next is you apply for an EIN or an employer identification number. This is required when hiring employees or for opening a business bank account. Obtained for free online through the IRS website. Sole proprietors without employees can use their SSN or Social Security number for tax purposes instead of getting an EIN. Understand and comply with the state tax requirements, including obtaining a sales tax permit and registering with the state tax authority to collect and remit sales tax for taxable goods or services. Separate business and personal finances by opening a business bank account. The required documents include a DBA certificate, an EIN if applicable, and a personal identification. Next, get necessary industry-specific licenses or permits. Set up your own accounting and record-keeping systems by tracking income and expenses using accounting software or manual methods. Save your receipts, invoices, and financial records for tax purposes. Next, consider obtaining business insurance when starting a business, including general liability insurance that protects personal assets from lawsuits, accidents, or damages, industry-specific insurance, professional liability for services like consulting or medical care, and product liability for manufacturers. Home-based insurance. Homeowner's policy may not cover business losses, so consider additional coverage with the rider or separate policy. And that's it for a step-by-step guide in starting your own sole proprietorship. See you on the next one. Still, you'll be subjected to the whole 120,000 profit, subjected to income tax and self employment tax, even though the drawings are zero.